If you've been looking into buying a house, you probably realise that it's a tricky situation these days with costs having risen so much across the board around Australia for the last couple of years. So I want to talk to you briefly about lender's mortgage insurance. Now, I just got an email from Domain. Today is the 29th of March 2022, basically saying that first-time home buyers are now needing to spend more than 5 years to save for a deposit. So you can see the page here. It's grim. And basically, normally with a mortgage, you need a 20% deposit to avoid that lender's mortgage insurance. And you can now see the time it takes for a couple to save that 20% deposit on an, notice, entry-level priced house, not a flash one. So Sydney is the worst at 8 years and 1 month, and that's gone up 18 months in the last year, so that's pretty significant. Melbourne's almost over 6.5. Brisbane's heading to 5. Same for Adelaide. Perth's still pretty good at 3 years, 7, which is where I am, etc. So you can see there's annual changes. They've all gone up significantly in some cases. And then the 5-year change, we actually had one small drop in Perth, which is all very exciting. So here's the thing you want to think about. If you're saving for the 20% deposit to avoid paying that lender's mortgage insurance, whatever the cost is, and you'd need to go and get some calculations done by whoever you're potentially getting a loan, you might spend so long saving for that deposit that the price of the house goes up more than the cost of paying the lender's mortgage insurance. So if you go to the Insurance Council website, you can see information here on lender's mortgage insurance. And, you know, as you probably already know, LMI is not really for your benefit. It's primarily for the lender. So if you somehow default on the loan, they're going to get their money back. Having said that, if you have it, it means that you're likely to end up out of pocket less. So it's not necessarily a bad thing. It's just most people don't want to pay that big deposit. So what you want to think about is, okay, hey, you know, if my home is going to cost me, I don't know, in Sydney in particular, they're so expensive, they're over $1 million in most cases. If it's going to take you 8 years to save for it, you might have to look at it and say, how much is the real estate going to go up in that time frame? You know, if you can only save 10%, i.e. half of it, and let's assume it takes you about 4 years, it might actually still be cheaper for you to pay the lender's mortgage insurance and get into the home sooner rather than deal with the fact that the prices are just going to keep going up at some stage. So just something to think about. You want to sit down and crunch the numbers, go and get some prices from your lenders, some calculations, some quotes, whatever you want to call it. Have a look around at the market, go and check out what prices have done in your market in the last couple of years. You know, look, nobody's got a crystal ball that can predict what will happen in 8 years. It could be, you know, we could have a recession and everything could crash and burn. We don't know, but it probably won't. You know, if you look back at all of the sales stats, and Domain's got plenty of info on that, you'll see in general prices go up over the long term of real estate. That's just the way it goes. So I managed to find the first house I bought, which was 50 Glendale Avenue, Hammersley, and it was actually a 3x2 with a pool. It's cool. But if you go down and look on Real Estate or Domain, you'll see often they'll have the property sales history. So when we bought it in January 2001, it was 140. I think it was 143. There was a agent's commission or something involved. The last time it sold was 627,000. Now that's in March 2014. It's now 2022. So you can imagine how much that property is worth now. So, you know, if you sit around and think, okay, well, in 14 years it went up from 140 to 627. From 2014 to 2022, it's probably gone up another couple of $100,000 at least. So, as I said, real estate doesn't necessarily always go up, but over the long term, it definitely does. And this is just a classic example. And you can look in Real Estate and you can look in Domain's website and see these sorts of figures from a lot of properties. Anyway, look, I hope that was useful to you. Come over to the website, check us out. We've got plenty of other great articles for both people looking at buying and selling real estate. We give you lots of good info and plenty of free resources. And you can probably look at, if you're interested in selling, maybe pick up a copy of my book, the How to Sell Your Home for Maximum Profits. You can get that on Amazon or .com.au, or if you want a free copy for a PDF version, you can sign up for that on thepropertyscoop.com/book. And as part of the I guess the bonus for it is that we'll send you a weekly email tip where we give you lots of great advice for real estate buying and selling and all that sort of stuff. Anyway, that's it for me. I hope you find that useful. Have a great day. Speak to you later. Bye.